Lately, there's been a lot of hype about vaccines returning us to normal, and that appears to be a sell the news event because the good vaccine news is bad stimulus news. So stocks were mixed, but the S&P 500 and the Dow were red on the week, and the Nasdaq also tumbled into the red in the last few minutes of trading on Friday. Notably, airlines rallied for the week. Banks also pulled out some gains, but cryptos had a big week with Bitcoin nearing its record high. And in other news, Bloomberg reported that the world's stock of negative yielding debt climbed to a record $17.1 trillion as pandemic spurred economic damage and monetary stimulus continued to grip bond investors, even with the news of a vaccine. For the most part, this doesn't mean too much to us here in the United States, but it does mean that the world is getting used to negative yields, and that isn't good. So, let's take a look at the charts. Before we get to our charts, this chart here from Goldman Sachs points out that as bullish funds have increased the length and level of the rising market, short interest has continued to fall, reaching new record lows. The median S&P 500 stock now has an outstanding short interest equating to just 1.6% of market cap. This is the lowest level in the 16-year data history tracked by Goldman. The point being is that the market is becoming one-sided. Contrarians be on notice. Now, let's go to our charts. And we're looking at a chart of the 6-month daily on the spiders, the SPY, and the close on Friday was 355.33. Now we're looking at the daily chart because this is where the action is lately. And as we looked at last time, you can see a channel moving here, moving up through there with the bottom line of the channel and the top line moving through here like that. Again, don't pay any attention to this here. For the most part, you can see the channel. Now we've hit the top of the channel. We're coming on down. There is a possibility that we might get another little bit of a reflection since we're still above this 20 EMA. And you can see here, above the 50 EMA, we had a bit of a reflection at that point. And here we had a bit of a hesitation with a small reflection. So there's always that possibility. But for the most part, I think we're still within the channel. I think the greater probability is that we head on down. But keep in mind, there might be a little bit of a reflection on up here. And we can see if it tests the top line again of that channel and heads down. But I think the greater probability is we continue to head down. The volume looks fine. And here into the MACD, you can see a kind of channel through here like that. Again, we hit the top of that channel. We're heading on down. Because there's a difference between the fast line and the slow line, that separation, that leaves some room for a reflection. But for the most part, the greater probabilities we head down. So let's just watch this. Into the histogram, again, you can see the nice cycle that's occurring right now. And hopefully we're still within the cycle. We can break that pretty soon, but for the most part, I think we're still in it, and I think we still head on down. Into the price rate of change, again, the separation between the fast line and the slow line indicates that there might be potential for a reflection. We can do some more sawtoothing up here before we kind of head on down. That's, again, the greater probability. There, the same thing in the RSI. And you can see the stochastics with the fast line moving through the slow line there. And then the Williams. Williams has come all the way down here below that midline, which means it's probably going to pull the other oscillators down too. Again, the greater probability, but always be prepared for a bit of mischief with the market. Often things can happen. Be prepared for the unexpected. One last look at the chart here and wait for that to head on down. Have some cash because the market is becoming one-sided. And for today, that's ChewDog Charts. Thank you.